$100 billion that the CBO would treat as far as being on budget, versus around $187 billion that the OMB is. And the difference is very simple as this, is that the OMB treats it as basically you only record on budget the actual dollars that have gone out the door. What have we spent to subsidize them? And Michelle has already talked about that point, pointing out as she did that initially Congress authorized up to $100 billion each, $200 billion total as far as potential subsidies to institutions, and then it went up to double that to $400 billion. And as Leonard and Michelle pointed out during the Christmas Eve massacre, they basically took that limit off entirely for the next three years, so that could be any amount of money, from up to the $5 trillion, I suppose. So as Michelle and Leonard pointed out, those charts on the red lines on the end could go really through the roof. But as they stand right now, the first of the two red charts shows what the OMB would treat it as. We believe that the more fair and accurate representation would be the latter chart, which is CBO estimate, actually not the money that's gone out the door, but the actual subsidy that the American taxpayers pay for the existence of these entities. Money going out the door is actually as other experts have already said, is basically an intergovernmental agency transfer. In other words, we lend money out to them, but if they're basically government entities, it's really just money that we're lending to themselves. So the OMB's assessment of $187 on the budget is not the appropriate way to do it. Any other questions? Sure.
Do you have any thoughts on how to resolve the final status of the GSEs? Presumably you're not happy with the status quo.
Okay.
We're all going to rush to I think we are all anxious. There are a limited number of options. One is to maintain the status quo, and as we see, essentially the GSEs have gone from roughly 45% of the market to 75 to 80% of the market. You add in FHFA, and essentially the federal government now controls our entire national mortgage market. Clearly, there is no need to have a government-sponsored enterprise in order to securitize mortgages, period, paragraph. I think most of us believe the only question is, what is the best transition to a competitive marketplace, so we don't, again, have this incredible asset bubble where people are led to believe they can own homes that they can't afford, and the federal government makes them even worse off. So ultimately what needs to be done is to return, to have Fannie and Freddie engage in a competitive marketplace where ultimately you would have to ratchet down their conforming loan limits and their retained portfolios over a reasonable period of time. Other models that people are looking at, a pure nationalization of the system, some kind of public utility system. But I remind people, prior to the real estate meltdown, there was a very competitive market in jumbo. There was a competitive market in subprime. But why we felt this need to essentially create this monopoly or duopoly that ultimately has cost taxpayers hundreds of billions of dollars, why we would want to repeat that, I don't know. But under the policies of this administration, the big are getting bigger, the small are getting smaller, and the taxpayer is getting poor. So ultimately, yeah, Fannie and Freddie need to be in the competitive marketplace.
Let me add to that a couple of other observations that come with the consequences of setting up government-sponsored enterprises to begin with. If you have out there in the marketplace due diligence on the part of investors, those investors are going to want to see certain requirements in place. One, historically, has been 20% down payments for loans. Now, here's the difficulty when you get the politicians involved with GSEs. The politicians replace political pull and muscle into the equation instead of market forces. So as a consequence, they lean on institutions like a GSE, and they say, well, why have 20% down? You should have 3% down. You should have 0% down. Give everybody a shot. 0% down. Once you've reduced the standards in order to get the GSEs to do what you want them to do politically, you've reduced the standards across the board for everyone. So there is that incentive, once you've created something like a GSE, if you're a politician, to go in and in order to try to look as though you're offering a benefit, you're now leaning on the government-sponsored enterprises to do things that frankly don't make economic sense and introduce moral hazard into the equation. And part of the problem also is that then you begin to say, well, you know, we've got paper out there, we've got junk countrywide. Who's going to buy this junk? If we want to advance subprime, mandate that the GSEs do it. At the end of every quarter, officers with the GSEs have told me they had to go out and purchase countrywide that they otherwise would not have touched. And part of the concept here was to send the message to the broader market that this now had the seal of approval from the United States government. This subprime junk now had the seal of approval from the U.S. government. As a consequence, what started with the GSEs now expanded out. The answer to this is to return to the market, so that you return market discipline. You remove the moral hazard from the equation. It's going to take a while to do, because investor confidence now has to come back into play. But over time, my hope, as Jeb's hope, is that we can move to a system in which market discipline is in play, we've removed the moral hazard, and we don't have those in the political realm weighing in and dictating and taking risks that even when the Federal Reserve come to us and warn people like Chairman Chris Dodd and others that they are taking this risk with the system, that we don't have politicians so focused on the short-term advantage of being able to claim, well, we've got the home ownership rates up, another 2% in the United States, and don't listen to the economists that warn that the downside risk is systemic collapse. And I remind you of this. They did not just say of our system. They said the entire international financial system is networked in here into our GSEs. The potential downside risk, they warned us in Congress, was a financial collapse across the board. And Congress did not listen and take the necessary steps. So for those reasons, I would hope that we can begin the road here toward recovery. Thank you.
First of all, I endorse what my colleagues have said, Ed and Jeb. What Ed was referring to is the mortgage-backed security. And sometimes during this last 2 years been referred to some of them as toxic assets. And that's basically what Freddie and Fannie hold. A lot of these assets are underwater. Now, short term, what do you do about them? You know, it was proposed with some of the banks that you create a good bank and a bad bank. And so a bad bank would be one solution as we privatize the GSEs. As Jeb said, I think Mr. Frank and many of the Democrats, and what really the administration has done is expanded Fannie and Freddie and their mission in the last year and a half. I think the press has somewhat missed that. They've expanded their role. And they want to continue it and operate it sort of as a piggy bank or a private utility. And expand the mission and really put, and one reason they don't want it on budget is they want to put some housing programs in there and not have to pay for it. But we all know that, sooner or later you have to pay for that. Particularly in that they're resisting efforts to go up on the premium and other things which Shelley Capito and our housing ranking member has proposed. There is another option that I have seen some of the Democrats are starting to float around, and I think you mask this as just a continuation of the status quo, but it looks different. And that's divided into 4 or 5 segments. You just divide up where you have 2 problems, you divide it into 5 or 6 problems. Well, how do you divide it? Do you do it regionally? Well, that really could create some problems, because sometimes we know that our problems are regional. That does take it. It does address contagion, but that's no solution at all. And if you create 5 or 6 messes as opposed to 1 or 2 messes, you really hadn't done anything. So this, I think, is going to be a collision of philosophies between Republicans and Democrats. And what you've also heard here, and I couldn't emphasize more, is that we crowded out the private market. When the private market started saying no to these securitizations and would have really taken a lot of the steam out of these subprime loans that shouldn't have been made in these securitizations, Fannie and Freddie stepped in and made them. And what they did is they made September of 2009 a lot bigger than it should have been had the government not gotten involved. This is an addiction. This is an addiction. The economy is addicted to cheap money, supplied by the government, backed up by the taxpayers, and we've got to wean this addiction off. And with any addiction, there's going to be withdrawal symptoms. There are going to be problems. But the sooner we do it, the better.
And with that, I thank you all very much for attending today.